Hello everybody, this is Toni Turner and welcome to the market now as of the market's close on Friday, March the 1st. Well, the S&P 500 and the Dow Jones Industrial Average rose today after 3 days of losses, slight losses, but losses, lifted by optimism about the prospects for, as you must know, a U.S.-China trade agreement. And now let's look at 3 charts that might give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely tracks our S&P 500 index. Now, as we all know, the SPY came down to its December lows on December 24th and then literally flew back up to where it is now, back up to this resistance point at 280 on the SPY or 2,800 on the S&P 500 index. Now, when the SPY closed today, it was trading at $280.55, right there at the 280 line. Now, since it hurdled over the 200-day moving average on February 15th, it's literally spent the last 2 weeks napping, sleeping, I think it looked like to me. It's been consolidating up here just under the 280 line, but it hasn't really been able to get over it yet. And again, it's waiting to see, the market's waiting to see how the China trade scene is going to play out. Now, last week, so it is right here at this 280 line, and again, that's resistance from back in November and back in October and further back in October, end of September in 2018. A tough line to get over right now. Now, last week, we talked about the RSI, the 14-day RSI, and how it can remain overbought for some time as the market moves higher. And that's what it's done here, even though we've been pretty much consolidating in the last week. So we are in a holding pattern here. And now the question is, and it remains as everybody wants to know, in the coming week, can the SPY break above 280 or the S&P 500 break above 2,800? Now we have support here at 268, and of course we have more support down at the 50-day moving average at 263. 85. We have more support right here at 262, 263. That's important support because, as we can see, that was very important back in November, October, November, December of 2018. So you can see the pattern here, the moves of trading in a range after it fell from the highs, then made the plunge down right back up. Many times when price pattern does this, then it'll hit the resistance line, as this one's doing right now, many times. Then it will come back down and start trading in a range like this. Now, that may not happen here. Of course, it may climb over that 280 line and keep going. I'd like to see 3 closes above that line, at least to start with, and of course go back up to the all-time highs. That'd be great. But if not, it may have to trade in a range here for a little while. I do expect it'll get more exciting in the coming week, and actually I certainly hope so, one way or the other. Just do something. Now, our chart number 2 today is in Toni's Market Club. As I told you before, we watch the IWM. This is the iShares Russell 2000. We need another 0 there, excuse me. The underlying index is the Russell 2000 Small Cap Index. Again, that is companies valued at about $300 million to about $2 billion in market capitalization. The IWM, or the Russell 2000, the underlying index, can act as a leading indicator for the broader market. So as the other indexes did, it fell dramatically to its lows down on December 24th to $125.84. That was approximately 27% below its August 31st high and definitely fell into bear market territory. Now, since then, like some of the other indexes, it has rebounded dramatically in a very nice uptrend. and it's walked up its 20-day moving average very, very nicely. Now, excuse me, when I captured this chart today, the IWM had closed at $158.24. It is white knuckling the top of the 200-day moving average, which is coming in just under today's close at $157.85. It also is right at November highs back here, which come in at $158.64. So right now that $158 and change is acting as, if I could draw a straight line, resistance along with the 200-day moving average. Now, we do go down to the 14-day RSI here. We do see that it was overbought a little more than it is now, but it still remains in overbought territory, just as the RSI does on the SPY. So we're waiting to see here. When a stock is in overbought territory, meaning the RSI line is trading above the 70 line, which is the solid line you see, that means, we used to say in the old days, everybody's long whatever you're looking at, like everybody's long the IWM. While that isn't quite true, it means that if it can't go higher here, that buyers are exhausted, and at some point some profit taking is going to come in. We just don't know when or if. Now, it does have support here at the 20-day moving average at 154.29, and it does have more price support here down at about 152, right down here at 150. Whoops, I meant to make that a little higher. At 150, 149, 150. And of course, right now the 50-day moving average is coming in at 145.69. That's today's price. What we don't want to see is we don't want to see price fall below 145 if it does need to trade in a range, because that would be breaking these prior support lows back here from October and November that come in at about $145. So that's a line that in the sand we do want to watch, and if it falls below that and the 50-day moving average, then of course we'd have to get a lot more conservative. So keep an eye on the IWM in the coming weeks. If it continues to go higher, that will be bullish for the market. If it starts down, we may be in for a bit of profit taking. Now let's look at our third chart today. I'm not sure that we've ever looked at this one before. This is a daily chart of the Global X Robotics and Artificial Intelligence ETF, symbol BOTZ. We're just going to call it BOTS. It has 36 holdings. It is a global ETF. The top holdings include Intuitive Surgical, Keyence Corporation, Mitsubishi, iRobot, and NVIDIA. Now, you can't see it on this chart, but BOTS opened as an ETF in September of 2016 at about $14. Now, by 2018, January in 2018, BOTS had flown to an all-time high of $27.42. From there, it headed south much of the time. Of course, you can see here that it was trading in a range last summer, popped up, and then started falling with everybody else in October. Now, on December 24th of this year, it fell to a low of 16. Since then, it made a higher low. I like that. The higher low part I really like. I like it better almost than a V-shaped recovery, because that tells you there are buyers there. And it's walked right up its 20-day moving average, the red line, to its close today at $19.77. Now, I particularly like the recent strength here that's come into volume on BOTZ. And that's the good news. It's not extremely overbought. That's good news. But there are some warnings here. It does have resistance overhead. It does have resistance here at about 2025. It also has the 200-day moving average coming down overhead. So if in the coming week the market can remain happy, because I don't like to trade against the broad market, if the market can remain happy If bots can remain above the 20-day moving average, I may add a small position to my portfolio. I will not buy a full position yet because number one, the market's overbought. We could see a retracement soon. And number two, I want to see if bots is strong enough to climb above current price resistance and the 200-day moving average, which again is coming in now at 2076. If it can accept both of those challenges and if it can do what I just said, then I will add to my position. I'm going to place my initial stop a little more tight than I usually do. Initially, I'm going to place it at $18.75 and then trail it higher from there. You may want to keep an eye on bots in the coming week. And now on to the coming week's economic reports, but first, please join us this coming Monday, March 4th, for our next session of Toni's Market Club. If you're not sure how you can make money in the market right now, let us help because we're doing well. In our weekly sessions, we talk about which side of the market to trade, what to watch out for, and I'll give you stocks and ETFs that may become high potential trades, and I also give you the entries, protective stops, and profit targets. Toni's Market Club is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, please go to tonysmarketclub.com. And now for this week's economic reports, not much going on Monday. Tuesday, we have new home sales. Wednesday, we have the ADP employment change, crude inventories, and the Fed's Beige Book. Thursday, we have our usual jobless claims and natural gas inventories. And Friday is the big day with our monthly non-farm payrolls that includes the unemployment rate. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.